All right. Hey guys, it's Cedar. Checking to see if Cruz is here yet. Guessing he probably is.
Yeah, I'm here.
Awesome. Okay.
Watching this rejection. I don't really trade movement right now, so.
Yeah, that was a pretty heavy little bap on the rollover for noon.
Right.
Awesome. Okay, I think I've got recording going. Yep, we are good to go. So there was something you and I talked about this morning. Just frustration in general, in the choppy kind of environments we're seeing in the more recent price action. So I'm going to let you lead off with that because it's definitely been, yeah, frustrating.
Yeah, oh yeah. Just making this announcement real quick. Cool. All right. What I had mentioned to what we were talking about this morning, what we brought up and thought, what we should talk about with current market conditions. And, we usually base these sessions off of what we see and what, around chat and also what we're feeling at the time.
Uh-oh, you know what? I just started the event. Hold on, something went wrong. I'll be right back.
Really, really choppy. The previous sessions were really nice, right? We were nice and profitable. We had some really nice trades, and then it just kind of just now we're just in some like choppy ranges. Nothing really setting up to play. So you could emotions start tend to pick up a little bit, and you would say get a little bit emotional, saying like stressed or maybe a little frustrated. Me personally, it's just like you're sitting here waiting for a move and never happens, and then theta kind of eats your contract, so it is a little frustrating. So I think it's really really important whenever you start to feel that and just trade less, watch more, and even if you don't want to be here, just listen to your body and mind, go do something else. The market is never going to go anywhere. So, but I think it's really really important to be in the right state of mind of wanting to trade and not being angry or just frustrated. So
And to a large degree, that comes from getting your teeth kicked in trying to trade price action that is not as consistent. It's not smooth. There's not good tempos happening. It's just really, I mean, it's like watching a penny stock right now. You'll see moves that are not typical do for like ES that look more like NQ, which is why I don't trade NQ a lot because they're pretty erratic and pretty wild. So having the choppy environment until you've traded it, and I use the term teeth kicked in, until you've traded it and not found that it was a good environment for you to trade in, it's really hard to recognize that. So if you guys are finding yourself in that position where you're very frustrated because you're trading and you're like, well, normally I do better. Like, what's happening? Am I taking losses? Or, just, you like end your day and you made $5. And you're like, really? And you can't think about this as a paycheck because it's not. It's performance based in relation to how well you execute in the current environment. And that does create frustration. So everybody's going to be in a different place in their journey as far as how quickly they identify it. That's one of the reasons I typically am not trading early on because I kind of want to see what the tempo looks like. I want to see how price is moving and what's going on with the size traders, or the commercials, and the larger traders who are moving the market. I want them to work out their agenda, set some ranges so that I can understand more of what might happen and how the price is moving. And there's some days you'll see me say, this PA is disgusting. I don't know. I'm not touching it. Or, okay, now that we've set the initial balance, for me, that's 1 hour. But you have to determine for you individually what that looks like so that you can, it's like testing the water. And from a futures trading perspective, I think it's tempting to just always be in the market because it's open, 23/5, so 23 hours a day, and to treat all the times the same, RTH, Globex, and they're not because volume is different and how much is being traded affects the price action. So you might find that Globex is better to trade because it's a little slower, and you can kind of see the agenda unfolding, where in that first half hour, especially the first couple minutes, but in regular trading hours, it's really hard to gauge what somebody else's large positions are needing to accomplish. And so if you're not very fast at your executions and you're finding yourself just in trouble over and over again, it's definitely time to look at your times that you trade well. If you're only trading during RTH, and I hear this all the time, oh, day traders, they trade for the first hour or two in the day, and then they go off and enjoy their life or whatever, or that's how it's marketed. I watch the market for the first 30, 45, 60 minutes, and sometimes I'll trade in that time, but I'm using it to set the tone for what I'm going to trade the rest of the day. So it really, if you only have an hour to trade, then the frustration could be real at this point, right? And I know you used to only trade the first hour. And there have been times in my career that I, like, oh, I'm done trading. It's only an hour and 10 minutes in, and bada bing. But it has to be adapted to what the current environment is. And I haven't traded, I bet I've traded twice in the first 15-minute candle, maybe twice in the last year. It's pretty unusual for me right now. And maybe as we're seeing volatility contracting, maybe I'll go back to trading earlier. But it's really important that you're finding the times that you're frustrated and identifying why you're frustrated. So if you're newer to trading, we get frustrated because we know the chop is not something that it's gonna emotionally exhaust, where you're not making as good decisions. So we know to kind of step back. And that's one of the reasons I'm up north today, getting ready to go visit a hot spring, is I'm made some nice money in the last couple days, but I don't really like this price action right here. We've got a lot of data. We've got Fed speakers this afternoon, and I'm thinking, why not go sit in a hot spring? It's Wednesday afternoon. Sounds great. Being able to make that decision is why we trade, because we have the ability to step away. And this was planned around what the data was, for sure. Like, I don't need to be trading during Fed speakers this week in how we're transacting, where we are. We've got a shorter term downtrend happening. So I want to see what the close today comes into, and then I'll be back to trading full days the rest of the week, most likely. Yep, and Cruz just posted the Fed speakers 12 p.m. Bostic, so he's speaking right now, and then Collins 12:15, and then Williams 12:45. Yeah, that's like a landmine field
this
right
is
there.
This is a nice time to take lunch, you guys.
Exactly.
So, I mean, it's literally all through lunch, which is nice. At least they thought about that.
I don't think they
majority of
thought
trading is going to be on hands anyways.
Yeah, exactly.
But
exactly.
you really want to, especially on chop days, there's times when, we're in a trend and, there's buyers on every dip, and it doesn't really matter what data brings. And you could just be patient and continue buying. On a chop day, it could go either way. Right. So this is just, okay, we're just we had this little pop. Yeah, we could easily we could easily come back down. We could easily pop up a little bit. But I mean, that what if thing. Yeah, no. If we had a nice bottom established, then possibly, but still, it could even just break. So,
and a lot of that goes back to knowing what your setups are and knowing what you trade well, which goes back to journaling. So just over and over, journal. Okay, had a couple questions. One was finding the best PT, which isn't really what this is geared around. So the best PT is what you're happy with, but more importantly, the best trade is one that you executed well. And sometimes that's a loss, that you cut your losses so that you didn't damage your account and take yourself out entirely. And sometimes it's profitable. So separating out the concept of a well-executed trade as a profitable trade, because a well-executed trade could be cutting your loss or could be properly exiting. And I think one of the biggest issues, and we talk about FOMO all the time in these sessions, when you exit a trade and you see it continue to go your direction, you're like, dang it, look how much money I missed out on. Well, that's fear of missing out. It's fear that you cut it too early. What you have to ask yourself, and I do this every time, am I happy with that profit? Am I happy? Is there anything that I missed that would have kept me in that trade a little bit longer? And that's the only thing I look back and do. Once I've closed a trade, if I'm like, the key structure there was we're at previous high of the day, chances were we were going to reject there. We obviously didn't, continue to run. And I'm just using that as an example. But
Right.
If I feel happy with how I executed it, if I feel like that was well executed, even if it does continue to go and I missed out on some money not catching the whole move, I could care less.
Exactly. And the amount of times that it continues versus the amount of times it doesn't. I mean, if you guys don't believe this, journal your trades, and whenever, like, even have a separate column and just do like T, which is selling the top, or C, which is continuation, T/C, right? And then how many T's do you have compared to how many C's? You're going to eliminate that bad habit quick.
Well, and as you get good at trading, you start to realize that you did have the right direction you could see, and you were happy with collecting that money. So let's say you made $300 in a trade, and yes, it went on to make 500, but aren't you happy that you made 300 and that gets added to the coffers, right? That gets slammed in a bank account somewhere. Instead of focusing on what you missed, focus on what you got. And because you can continue to build that. If you focus on what you miss, you walk into the next trade with that thought. And then you make decisions. That trade, based on the last trade, that you say to yourself, I should have held this. So this one I'm going to. This one I'm gonna pull the hero, right? I'm gonna hero this and watch. And then that's the one that pretty much goes against you. You might get a small amount of profit, and then bam, you gave back half your profits from the other one, because you were allowing emotions to make the trade decisions instead of what's your structure that you're trading off of, what's your trade setup, when is this invalidated. Thor cracked me up yesterday. He posted something, I don't know, I can't remember what I said in Market Talk. It was after I'd exited that like $10, $9.75 move on ES. And he just posted a GIF of Spock, and he's like, I don't know if people understood that. They might think, I don't know. I think what he posted was, this is a young cedar, and it was the GIF of Spock. And it's just because I try to be as logical as I can instead of going, maybe this will work. And that's something that I definitely, the main reason that when I first came in, I was like, psychology is what I need to focus on for people, because the what if, the hopium, all of that is what keeps you in trades and what will run your account. So you have to just think about it as more, I know I hear people talk about be robotic, emotionless. You're a human, you can't be emotionless, but you can be logical and analytical. Not letting the emotions.
Whenever you are feeling those emotions, you can also get up and walk around, and then guarantee you in 10 minutes you'll feel a lot different.
I think it's even 30 seconds. And maybe that's for me because I've been trading for so long, but I encourage you guys to break away from the screen. Yeah, get up and like eyeball off. Even standing in a different spot in your room can change how you're thinking about things, where you step back and you're like, what was I doing? Like what's happening here? So.
Yep. Just take a walk around, you guys. Come back, reanalyze, see if you like it. If you love it, go with it. If not, then, well, take the day. Take an hour, whatever.
Exactly. And it could be the day, it could be the hour, it could be the rest of the week. Like last week, I didn't trade the most of the week because we had a very, very bad accident happen to somebody very close to us. And it is what it is. Like I was not in a place to be able to focus thoroughly. And so then when I came back into trading on Monday, I took even longer than I typically do on a Monday, because you've got a couple days away from the market. You always want to kind of just slowly dip your toe back in, that whole concept. So I waited even longer yesterday, or Monday this week, because I was off for most of last week. I think I probably had like 4 trades total last week. So just because you've been trading for a long time doesn't mean you just immediately just jump in and can make those non-emotional decisions, because it happens. It happens to everyone, and you have to have things in place so that you can reflect. It's a self-reflection thing to be your own risk manager. And the greed thing is what drives all of it as far as I'm concerned. It's what creates FOMO. It creates fear, because then after you lose a bunch of money from FOMO, or well, we don't have to go into that, but like what you weren't trading well because you were trading your P&L always goes back to greed. And if you are focused on how much you can make, so all you see is dollar signs, right? Just the diamonds everywhere. You are going to be in trouble in a trading career. You need to focus on how much you can lose. Capital preservation. And if you are struggling with greed, that needs to be, capital preservation is key. Your first responsibility as a trader is to preserve your capital. Second is to have small, consistent gains. And the third would be higher profits or higher profitability per trade, because you earn the right, by having built up your account and managed your trades well, to have given yourself a little bit maybe larger stop, trading a smaller position with a larger stop, things like that. But it's not something that's just, oh, I'm putting money in the market and I'm going to make money. That's because I'm a day trader now.
Yeah, making money is only half of it. Portfolios, because not every day you can make money, and then those days that you can't, I mean, you got to really know how to not lose a lot.
Right.
That's the hardest part too, to teach yourself. And that's, if you're in a constant circle with, if you win more trades and then you're still stagnant with your account, then you might be losing a little too aggressively. So maybe take a take a look at that, and maybe set a 2 or 3 trade loss rule, and that kind of helps. And maybe reanalyze your position sizing. Could be that, or how long you hold things.
And it is hard to switch mentally from times where you have to take your profits, that see green, take green, like sell it into strength right now, versus other times when the tempo is good, like price action is smooth, you can sit in a position for longer. So being able to create that mental agility to go, oh, okay, well, that was profitable, and then it, went back to break even. Dang it, I didn't execute fast enough. You take those clues from that trading day and from the current trading environment, and not, it was a month ago, price action, or the chart was in a similar place, and that worked a month ago. It doesn't matter what worked a month ago. It's right now, where are we in relation to how the market's moving? And I think one of the biggest things to think about is if you're seeing really big up days and really big down days, so your P&L is just wild swings back and forth, that's a sign that you're trading your P&L, that you're letting emotions run your account instead of analytical, technical analysis, and you're oversized. If any one trade can blow your account, you're oversized. If any one trade can make your account, you're probably oversized. There are some moves, you get those 1,000%ers, but they're not all the time. And so that random reward, which is not all the time, creates this addiction to, if I just hold this, I'll just hold it and it'll be 1,000%. That's why I don't do runners 99% of the time. I would rather be on to the next trade. And if I decide to re-enter the trade, I check my profit. I'm going to buy this on a pullback or sell it on a pullback, whatever. It's going to go back to, are you sized properly for what your risk tolerances can handle and what's going to keep you in your trading business? Because really, eventually, if you can survive long enough, you will be successful. But if you blow yourself up because you're oversized and taking wild P&L swings, that's usually a pretty good sign that you won't be around next year. And that could not be because you lose all your money. It might just be you're frustrated and you're like, whatever, I'm just not going to do this anymore. Somebody asked a question. Sometimes we know you should not take a trade in a no trade zone, but we'll enter a little early than planned. How to get away from these situations and stop the temptation to enter early. That's where the candle closes are really important. And so if we want to use the 10MA 5-minute protocol that I have for New Traders Bootcamp number 2, it's not a hard stop on those. I give the next candle a chance to be able to open, but it's because it's a shorter time frame. I'm looking for the response after that candle close most of the time. So if it needs to close green over the 10 moving average and it closes green, but then the next one goes red immediately, that's still going to be my close, versus goes red immediately, but then starts to bounce, right? So wicks back up. You have to define, you have to back test. And this is going to take 100+ trades. If you have not read Trading in the Zone, that is their suggestion. In fact, Mark Douglas says that they're pretty much anything, if you do it over and over and over and over again, you can find consistency with something. You're not going to find it if you're jumping all over the place in different trading concepts, like you haven't defined your edge. And his suggestion at the end of the book is to test something 100 times. If you test it 3 times, say it doesn't work, you didn't test it. You're just leapfrogging here, there, everywhere. So defining your edge is going to be one of the most important things. So if you've defined that this is a no trade zone, then you're breaking your rules if you're trading inside it. There's a difference between an early entry of we're outside of the range. A safer entry would be after this candle closes inside that range. But there's the difference.
Wait for candle close confirmation.
Well, and sometimes that means you miss it. Sometimes, right?
Yeah, sometimes, but majority of the time there's also that invalidation, and you want to eliminate the maybes. That's the whole goal, is the sometimes or the what ifs. You don't want that. You want the confirmation.
Or if you're going to say at this candle close, if you're going to say if this candle close, it's invalidated, I'm closing the position. I'm not adding to it. I'm not hoping. If it's invalidated, you exit it. So if you're choosing to be in that no trade zone, you have to have defined, for me, it's 30-minute closes. It has to be defined and followed, or you're not trading your edge. You're just out there throwing spaghetti at the wall, and hopefully it works for you. It's a scary concept.
Hopefully it sticks.
Yeah. Something will stick, but most of it ends up on the floor.
That's why I only throw one noodle to test how good the pasta is. Usually it sticks.
So the best way, oops, give me just a second.
Yeah.
One of the best ways that I think, or that I manage what that is to resist the temptation, is my loss rules. If I've got 2 in a row, I'm put myself in an automatic 30-minute timeout. And I know that if I come back from that 30-minute timeout and haven't figured out why I'm not executing well in relation to where we are in the market,
that is huge news. Sorry to interrupt.
That's okay.
McConnell's to step down as Senate GOP leader in November. We might have a pretty significant move here. If anybody's in positions, just be aware.
Yeah, that is some interesting news.
All right, my bad.
That's okay. So I know that if I come back from my timeout and I lose the next trade, I'm done for the day. And that has to be self-imposed. So if you continue to trade 3 more positions, even if you end up turning the day around after your 3rd loss in a row, and that's perspective of what I've developed for myself, then I still haven't followed my rules, even though I turned the day around. So when I come back, I'm going to be really discerning as far as my next entry, because if I haven't really had that like, all right, you're going to meet your maker kind of moment, then I would just keep trading and potentially keep losing if you're not seeing the market well. So that's the way, and I refer to as setting a stop loss on yourself. most of the time after that break, because I know that I'm not trading anymore after a third loss, most of that time I come back, head's in the right place, and I'll be profitable on the next one. So for me, it's 3 in a row to be out for the rest of the day. If I do 2 in a row, third one is profitable, and then I have 2 more losses, I'm done for the day. And that's not written anywhere. I just don't see any reason to continue. So if you can proceduralize, or you can be structured in how you basically are your own compliance officer, it can make a huge difference in how your survivability happens in trading.
I think a lot of, or another big part of that would be also the ability to adapt. You know, some days you're not going to be able to take trades, and you got to respect that and just, you know, I don't know. Well, there's really rare amount of times where you're gonna, you know, not be able to take trades, but there might not be a setup until later in the day.
Yeah.
Kind of like yesterday, right? And I saw a lot of cash sitting, and then we got a move, and you know, I saw a lot of members making some money, but sometimes, you know, you trade a lot less than other days, and it's just whatever the market gives you.
For sure. Yep. So it's all about self-reflection and self-control. Developing what you need, so that, because no one's going to be more familiar with what your failings are, where you struggle. And I talk about this a lot. It's all over the Psychology Channel. Trading is the truest reflection of yourself, of areas that you struggle with in your whole life, not just with trading. And you can't lie to yourself about it because your account's gone, kind of thing. So if there are issues with self-control, they're going to show up in trading. The more you can develop that strength of mind, strength of mentality, however you want to phrase it, better off you are. And I think patience is critical for that. I know you talk about patience a lot.
Yeah, patience is everything. You know, just a question to ask yourselves out there, and you know, I ask myself this too. I mean, pretty much, you know, whenever I have a bad day, was it impatience that got to you, right? Were you not patient enough? And did the move you're looking for still happen, but you're already in timeout? You already stopped out for the day. You know, you took your losses. You're done. You're respecting your rules, and then your move happens, and you're sitting there like, well, you know, I could have just waited, right?
Yeah, right.
And the amount of times that happens, it's you know, just it. I mean, you don't want to do that, you guys. Just be patient. If you don't love the setup, that's why I say if you don't love it, right? If you don't love it,
and it can be
could like a
referred to
setup,
A+.
but then you might be bored. Yeah.
Right. So is it A+ or is it a B-?
Right. Exactly.
Or
And I
is
know
it
C's
a
get
C?
degrees, but
Oh,
I mean,
yeah,
come on.
not in trading. I don't know.
No.
Those end up,
Well, 70% win percentage, it's pretty good.
yeah, but not the setups. So the
Yeah, no,
setups themselves
no,
are really
definitely
important.
not. Yeah.
And
Setups,
if there's
A+, yeah.
one thing, if you've got your one trade setup, so we could call that the look below and fail, your one setup, if the setup's not there and you haven't developed another setup, aka you've tested it and proven to yourself over 100 test trades, so sample size, you'd have one setup. And you see that at least once or twice a day, pretty much everywhere. So they're there. You just have to be patient and wait for that to show up. And if you developed multiples, so you've got, you know, multiple setups that you know that you trade well, not that someone else does, but that you trade well, then you have different protocols around how you manage them. And if you're trading outside of those that you have defined, if you're just trading it because someone else is trading it, or you don't really know why it doesn't make sense to you, then that's where the frustration is, I think, for a lot of people, is it's just, oh, I'm going to follow a trade because somebody else is taking it. I don't follow anyone's trades here unless I look at it and go, oh yeah, look at that. That's a beautiful setup, right? And it's something that I know that I trade well. Or for instance, when I first started with bull trades, I don't trade Apple, but I'm trading QQQ and SPY. So if I was in QQQ calls and DCruz would take an Apple call, I'm like, all right, confirmation. Even if I'm not trading it, it allows as a confluence because of how much influence Apple has on tech. So just be careful trading everything that you see, because it does create that mental fatigue, which is where we really start making bad decisions. Thor just said that McConnell was in office during Prohibition. That's hysterical.
I saw that too. Yes.
And then he said, "Joke." Exactly.
We're kind of just selling out that pop. We had an opening, or not opening then. At 10:30 pop. I guess you could call that crude oil inventories, but
I
not
do I
really.
do
But
find it
yeah,
interesting that we've got Fed speakers. There's no when you have an announcement like McConnell stepping down happen right in the middle of Fed speakers, that was not an accident. I promise. That was there was a reason behind that. So
right.
losing anchored VWAP here. I am actually out of time for our session today, but I feel like we covered a bunch of stuff. And if you guys ever have questions specific, we try to grab what we're seeing, what we're experiencing in our trading, but definitely let us know what you want us to talk about. It gives us an endless supply of talking points.
Right. And it's more, self-appointed. So, expedite your learning.
Exactly. And if you haven't spent a lot of time inside the psychology channel, that will be your homework until this event next week. So my heavy suggestion is the trading psychology risk management is going to be your focus. So I am going to sign out, and we'll talk to you guys soon.
Talk to you soon, Cedar. Have a good one.
You too.